afternoon. I'm Shobhita Agarwal. I'm the founder and CEO of Craft AI. We're going to talk about Agentic AI and credit today. In BFSI, over these years, rule-based automation systems have led to a lot of efficiency in the system. However, what we're realizing is that as customer volumes have increased and also customer expectations have become more realistic and real time in the era of quick commerce, we are realizing that automation systems are not keeping up with the changing things on the ground. And this has led to need for a system which can not only act on things that are decided by humans, but also can read the data, plan itself, prioritize, and also make decisions. AI is now moving closer to making decisions. It is not only executing, but it is also prioritizing, it is recommending actions, and it is also learning from real outcomes on the ground. In credit, this shift is primarily affecting collections, compliance, underwriting, and monitoring. What we want to explore here today, however, is not what AI can do. We want to identify what AI should be allowed to do in regulated environments such as these. We'd like to discuss how we can balance the freedom and autonomy along with compliance and regulation to enable a stable future in BFSI. I'd like to request the panelists to please introduce yourself and share a few starting thoughts on this topic. Mr. Nischal, you can start.
Yeah, hi all. I'm Nischal Tanna. I'm the CEO of Transform Home. It's pretty interesting. A few years back, we were talking about automation. That was the in thing, and now, of course, autonomy. At Transform, we have been part of a lot of transformations like modernization, automation, and autonomy. What I would like to, of course, my thought process around today's discussion would be more around human in the loop and how agentic AI is not the one-stop solution, but it's a part of the solution. So that's where my focus will be.
Good afternoon. I am Sudheer Warrier. I head the technology and digital function for Sundaram Finance. I've been here for 4 years now. Prior to that, I've spent 30 years in TCS, so a technologist at heart. And I firmly believe that every one of us' job is to solve problems and not to use technology. So coming from a technologist, it may not be sounding very good, but I feel there are problems which are better solved by lesser engineering, and there are problems which needs a lot of engineering, use of tools, AI, etc., etc. So the endeavor that we in Sundaram we are doing is to see what is the best solution for the problem that we have at hand, and we have reasonably used AI in the last few years. So we will talk about it as we go along. Thank you.
Good afternoon, everybody. My name is Mathew Panat. I'm the Chief Technology Officer at HDB Financial Services. Been with the company for nearly 5 years, and I've seen how the technology landscape has transformed for us as an entity. When it comes to AI, I mean, we have done some bits and pieces of AI. I wouldn't say that we have even scratched the surface, so to speak. There's miles to go, and I'm sure that I can learn a lot from my co-panelists today, as well as happy to hear questions and inputs from you. Thank you.
Hi everyone, my name is Srijan. I'm one of the co-founders of Finbox. We build technology solutions for lenders and then banks and NBFCs. We've been doing this for a little over 9 years now. I have seen the era where AI was an anonymous Indian to AI being artificial intelligence. So super excited about this panel. And being a technology service provider in this industry, we have to constantly disrupt ourselves. A few months later, we launched something which was, an intelligent workflow, and now we are figuring out how can this even be disrupted by something which is an agentic workflow. So I'm super excited about how the industry is going and the pace at which technology is evolving. Hoping to contribute to the panel and learn something.
Hi guys, it's Sanjay. I'm a Chief Liability Officer at KIST, part of the founding team, and been with KIST for more than 10 years now. We at KIST largely focus into retail lending. Primarily the core focus is we meet the customers end to end. We never shake their hands in person. It's completely digital driven, I would say, journey. In this, we have been evolved ourselves from the codes or the models which we used to earlier avatar, and now where we have been adopting a lot of the avatar with the use of the agentic AI, which help us not only to indicate or get the credibility of the customer, but also help us to understand what quantum to be offered and for tenor to be offered. We will have a more deep dive when we have the greater sessions ahead along with our co-panelists. We'll add value how we do more proactively in terms of the credit behavior of the customer and how we end up at the lending in real scenarios.
Thank you so much. So we'll start with some introduction questions. Mr. Mathew, a question for you is, as AI moves from automating tasks to recommending and initiating actions, what do you think financial institutions should do to draw the line on autonomy in credit decisions, and where should they draw the line?
Sure. Given HDB's background, we are purely retail focused, but the unique part of it is we are as disparate as we can get when it comes to retail lending. So we do consumer durable loans, which is basically you walk into your Chromas or your Vijay sales, and we also do construction equipment loans. Target customer is typically the retail consumer, and that's why we say we're retail focused. But look at the disparity of the products that we have. Now, how do we make a difference in the way we engage with our customers, right? One part of it is the acquisition channel, and in the acquisition, credit appraisal plays a big role there. What we have learned along the way is there is a lot of knowledge that we as an entity have, because we have been in existence from 2007. So we have some vintage, so to speak. So we know the behavior of our customers, the behavior of certain geographies and that kind of stuff. Now, I used to use my classic statistical modeling tools and figure out what the product should look like, who the ideal customer should be, where the next branch needs to be opened and all that stuff. But with AI coming in, what we have seen is we can take it to the next level, where simplicity, frictionless, productivity, all these aspects can be baked into the journeys as well. And that's what we have been seeing. But on the other hand, even the regulator has understood that these are areas that is new territory for a lot of us, right? And we obviously do not want decisions taken arbitrarily, for which we are unable to explain as to how those decisions were taken. So they come out with this free AI framework, if you must have heard of it. We are guided by that at this point in time. I know it's work in progress. So as a classic governance mechanism, we obviously have guardrails and all that kind of stuff, but we also said we'll always have human in the loop at this point in time, because we don't know how the behavior is going to be. We'll be a little more cautious coming from the house of HDFC Group. It's better to be slightly on the cautious side, but we will continue to tinker around with the technology, figure out what works for us and what wouldn't work for us.
Yeah, I think so. What you're trying to say is that definitely the future is going to be more of a collaborative effort between the AI and a human. And AI is going to be more like a co-pilot to the human, and the end decision making is still with the regulators. Thank you so much for the answer, Mr. Srijan. You're doing this from the front line. How do you think AI co-pilots are changing day-to-day work for underwriting and collections in the industry right now? And what do you think decisions should remain firmly with humans in these areas?
Sure. I think the final decision of underwriting, which is whether to say yes or no to this file, and what if yes, what is the loan amount and what are the parameters, is always human-led, or a rule-led decision, which is basically a hard rule written by the human. So if you look at industries, we have something called as ASAP journeys. ASAP is as STP as possible. Okay. Now certain products like personal loans are fully STP, where the decision is done by a rule engine. Even before this entire agentic AI just came in, it has been happening since years, where STPL is being underwritten completely digitally. As you move to slightly more higher ticket size or to the corporate side, the ticket sizes increase and the journeys are there till sanction. So you have some human in the loop. Now what AI is doing is reducing the time of review for human beings, in a very, very good way. So, for example, basic things like form filling, document parsing, CAM automation, arranging all the information that a human needs to come to a decision is now done by AI. Now, it is different than your regular RPA, your regular robotic process automation. It was done, CAM automation was even before the agentic world came in. This just has high agency. What that means is, for example, if there are certain things missing, it will go on a website, scrape something off and get it. For example, let's say your CPA is doing a Vahan check and Vahan does not have an API. An agentic system would figure out that this is how you do a Vahan check, go to the website, get the information, fill in the CAM and all of that, right? So this is changing very rapidly. So the CPA team basically, which prepares everything for the underwriter, that is being changed by AI systems. The operations team, which go through a checklist and say, okay, this check is pass or fail, that is changing by the AI. Sales team, which always gets to know later if there is some pendency in their file. So, there is something called as a login checklist. Now, every lender has a login checklist where they want a list of things to be there with the underwriter even before the case comes in. Until and unless the login checklist is filled, the sales team has to keep getting the data. This feedback loop is getting shortened by AI. But what is not happening and what ideally should not also happen is, especially for larger ticket size loans, the decision cannot be uploaded under the current free AI framework also. So, the explainability has to be there, and, you talk about human in the loop also. So this part of final decision is still with the human, but the time to take that decision and the information available for you to peruse when you go through the decision is massively simplified with AI.
Good. From your experience, can you share some examples for the audience where you've seen such systems work very effectively? Any use cases that you can share?
Yeah, sure. So we have something called as, assisted journeys, right? So we are the guys who build journeys for a living, for different loan products. So we build personal loan, business loan against property journeys. Recently, we've built assisted journeys also. Now, in assisted journeys, while there is a form, but there's a lot of documents. So you can build a fully assisted, chat-based journey where you just dump the entire thing in a journey and you dump all the documents. The agent would figure out what document is what. It would intelligently categorize that this is GST, this is ITR, this is financials, this is lease deed, this is electricity bill. It would enrich all of the information and prepare like a list and a CAM report and give it to the credit underwriter. And if there are certain things or certain scenarios that the credit underwriter wants to model, it can just speak to the agent. For example, what if 1 out of the 5 top creditors starts to default? How should I model this scenario during my underwriting? It's a scenario, right? So how does an underwriter model this? Or another use case could be if, let's say, this customer's salary drops or does not increment next year and I'm giving them a multi-year loan, how should I factor this into account? Or if this customer loses job, how should I factor this into account? So scenario analysis like this usually used to take days because you would have to redo the entire CAM, you have to redo the entire calculation. With an agent in place, you can do this entire loop of, refreshing the data becomes very, very short. So this is what we are seeing as early wins in this space.
Thank you so much. Mr. Warrior, with the Sundaram's vintage, you being one of the leaders, so from a leadership standpoint, as this space evolves, what do you think are the risks that emerge and how do you contain it? How do you make sure the AI is accountable for the decisions that it is doing?
Firstly, in Sundaram Finance, we believe that the human is the biggest asset, okay, and customer relationships or employee relationships are very touch-based. So, any technology, including AI, is seen as something that helps you either in productivity or quality of the work that you do. Right? So, the critical thing is, it is not about doing automation or creating autonomous functions just for the sake of it. Find out what is the most important problem to solve. So, for example, where we have started using AI, including the Gen AI type of capability is the area of document scrutiny. So when we look at contracts which have not performed, when you go back and do the root cause, it was evident that there was data available which could have predicted certain things about the customer, but we failed to look at it. So humans have a limitation, however intelligent they are, because there's something called fatigue, right, for all of us, and it all depends on the day of the hour of the day, how keenly we look at certain things. So, and also how much we can do. It's like a examiner looking at an answer paper. Right? Same examiner can do it the next day and the marks will be different. That's the human limitation, right? So those are areas which are good for AI. So this whole document scrutiny comes up with a lot of false positives, or it comes with positives which you need to refine as you go along, right? So what we are doing is we have taken the scrutiny as the main thing. So the point I'm saying is the risk element comes from what is the downside of not doing it. So if I let humans do it and I end up missing a lot of things, is that risk higher, or using AI, spending a lot more effort in identifying, put a human in the loop or use confidence level to cause it, which is the lesser risk, is a very important element. The other area where we are looking at especially AI is, if you look in India, the biggest problem, especially pan-India companies, is the regional language, people comfortable in that language, and most of our systems and technologies are English heavy, right? So how can I use language, voice to text kind of capabilities and merge that into your flow, which actually takes away huge risk of people not even recording what they have. The risk that we have today is people don't put down what they observed with a customer in the remarks column because they don't know English and they don't have the time to do it. The moment you give them a voice interface, they are more likely to say what they saw, and even if that translation is only 70%, you're much better off than not having the remarks. So you have to calibrate risk that way as a leadership team and decide where you need to do. You have to have guardrails, you have to have controls, etc. But identifying those problems is the critical thing in my opinion.
Understood. And where do you think the accountability lies for the decisions or the data or analytics that the AI is providing?
Whichever business or businesses, groups, functions, they should own it anyway. So for example, if there is a function called scrutiny document, scrutinizing the documents, they own it. So it's based on their inputs only an AI can work, right? You can train an AI to do certain things. The same capability I go and put it in another financial institution, it will not work because the way they look at it is different. So the accountability for AI to work rests with the business.
So still with the humans.
Yeah, sorry?
It's still with the humans and the decision makers.
Exactly.
Mr. Nischal, what technical capabilities are essential for AI systems to operate independently while remaining controllable and auditable?
Yeah, so one other thing I want to share, agents are, just see them as another probably superhuman here. Don't see them as different. I think that makes life very easy to understand where they fit in the context. So what I see is, I always tell to my team, there are 3 B's which are needed for executing an AI ecosystem. First B is for the brains, which is your knowledge, the context. If you have a model which doesn't know your system, it's of no purpose. I feel it's just an experimentation which has higher chances of failure. The second B is more on the brakes, the guardrails, which the team was talking here. And I in one of the conversation, I got a very good point from him that any industry is complex, right? Any industry has risk. It's not just BFSI, but of course we are talking about BFSI here. So the second B stands for brakes, which is a guardrail. You need to have the right guardrail. Just like you have a checker maker in your today's world, you need to have agents checking on each other, right? So there is a policy agent, there is an audit agent, and there is an execution agent. So everybody does only one thing and checks on each other. So I feel that B is very important. And the third B is the black box. like in a plane you would see it has all the data at the end of the day. So the audit trail, which is the chain of thought, the things which the AI actually thought through before making certain recommendations. I won't say decisions, I'll pause here because decisions is something which we don't support AI to make. Let it recommend. Now on the last point on the black box here is, I want to just tell you, like, as part of a few projects which we did, it was fascinating to see that AI actually maintains a far better audit, immutable audit, things which cannot be changed, then probably a bunch of humans could, right? It could be, as you said, bad hour of the day, you might miss logging something. So I think the audit trail maintained by system is very important, the black box. So these are 3 Bs I feel for any AI, thing to be successful.
And Mr. Sanjay, what do you think, how are you making design choices in Kish to make sure AI remains compliant and useful at the same time?
Yeah. Before we get into this, let me step back. What are the use case scenarios for the agentic AI for any financial services? It's largely 3 use case scenarios. One is customer onboarding and customer engagement. Second, we have the underwriting and the fraud detections. And third is the servicing, which is largely drives with your customer collections, right? Now, when come to the customer onboarding and the customer engagement, the identity of any financial services, or you could say the core ethos, is with respect to the trust. So for any financial services, when they are adopting, literally when we as a case go into the agentic AI tools, largely for the deployment, for the onboarding of the customers, where customer is coming and exposing his lot of his PI data, right? His first name, last name, and the KYC data and everything, right? It becomes ethos for us to ensure that when we are integrating such agentic AI tools, such data has been marked, has been stored, has been diligently verified. It cannot be something safety protocols should be maintained properly. There cannot be a threat on the APIs. The system should be very efficient, that they are not vulnerable for any third party kills in it. Second, when it comes to the underwriting and fraud detection, like Srijan said, very important that we have a scenario analysis, right? For example, I am into the lending, right? And in the lending, when I have let's say, for example, X million of customers, right? And when for doing the business for X million of customers, what are the database where I'm deploying for the reading my models, right? Like for example, GB model if I'm deploying, and that GB model if I'm deploying, if I'm having only thousands of customers understanding behavior versus that behavior, it doesn't make sense. So for any underwriting tools we are deploying, there should be a proper set. The vast data sets, you should understand the behavior of the various customer behaviors. Like for example, you are operating, let's say, states of Maharashtra, Tamil Nadu, and Gujarat, and you are understanding the behavior of, let's say, North End, then it does not help you to understand where you have to deploy the agentic AI tools, right? So maybe that major economic factors also play a very vital role. Exactly similar in the format fashion of the fraud detections rule, right? You may have to be very eco in terms of the various things. Like in digital lending, you may not have access to the IMEI, right? You have to be very compliant. You need to ensure that what data you can actually read from the device, right? You need to be ensure that it should not only compliant with only in terms of the customer and the RBI, but also need to be compliant with the TRI guidelines, because you're exposed to the third-party guidelines also, which is prevalent in the market. That becomes core important in terms of compliance piece while you're doing this. And in parallel to underwriting and the fraud, what is core is that while you're writing the models, right, you should also have the models in a simplest way to explain to the third party. Because RBI is one who will ask you, right? RBI will knock you, you are the REs, right? You should be capable enough to explain RBI why I deploy this model, what behavioral signs they are sending me, and what behavioral signs I'm using it to underwrite this, right? Because ultimately, RE will be responsible for the RBI. You cannot ask the front end of the agent tools to play a role for you, right? They may design for you, they may deploy for you, right? But ultimately, you have to go and explain the RBI why we choose to opt for this rule, right? That's become a core fault, so you should have a important layer of the detailed analysis which can be extendable in the simple language. And thirdly, coming to the underwriting, right, and the collection, so underwriting fraud, might be agentic AI tools like Srijan can help you understand that. They may not eliminate the manpower. They may make the manpower more superficial, right? Now manpower has to ensure that they should monitor those models. They should have a leading early warning signals that whether the model is performing correctly or not. There should be early warning signals. They should be protecting on that part. Maybe their job is now shifted from deciding where to lend, but now their job is to understand the models which we have deployed, are they be sharing any false positives or not. That becomes a core from that perspective to be compliant in this case. Lastly, in terms of the collections, again, like in the SSA, we maybe outsource our collections to agencies, we may outsource to collections to, let's say, any field agent and right. We need to be very particular in terms of what bots they are writing. Are they sending in terms of the RBI guidelines, which says you cannot send at any point of time. You have to be very vigilant about the time. You cannot send before 8 a.m. and after 6 p.m., right? So you have to have the RE is responsible. If someday the agentic AI tools have a server which is boosted at 7 p.m. or they deploy it and that becomes break it, then you become responsible to RE. So you have to ensure that you have such agentic AI tools there, because ultimately financial services is all about trust. You have to be trustworthy AI partners as well in this. So that's my thoughts.
Yeah, no, thank you so much. That's a very good segue into the topic that I want to discuss is how ready are we to explain these decisions that AI is making to regulators, and especially given the probabilistic nature of AI. Mr. Mathew, how do you think we should design AI systems that can explain decisions to regulators, auditors, and internal risk teams?
So, if you look at the free AI framework, they have categorized the usage of AI by low, medium, and high, right, from a risk categorization perspective. And if you look at the highest risk, where they put it is credit underwriting or credit decisioning is the highest risk, so to speak. So what we have done at our company is to ensure that that is a piece where we use the data points from whatever AI generates is more to augment the credit decision, which a human being or a scorecard-based model transfer. But we have been successful in using it in use cases where some of these insights, like for example, when we do a consumer durable loan, and by nature of consumer durable loan, most of you would be aware that you're getting it at 0% interest. At least that's the belief that you have, right? But it works in the background. There's a subvention scheme. You have tie-ups with the OEMs. There are discounts and so on and so forth, right? But for us to make it as a profitable sale, what it requires is to get that subventions, get that discounts from the OEM, the dealers, and so on and so forth. So if you tomorrow walk in and buy a Samsung phone, I should bill Samsung, the OEM, for that particular phone and not, let's say, an Apple, because Apple will reject that request. Now, can I use AI for these pieces? And that's where we believe there's a merit in using AI solutions, computer vision. Typically, it's the use case. So these are very specific use cases where the regulator will not have a challenge, right? I mean, they will not even ask you to prove, because that's your operational improvements and your credit inputs that you're taking to take a decision in an automated fashion. But if, let's say, the AI that I build or the models that I build run and take decisions saying that this gentleman did get a loan, but this gentleman didn't get a loan, or this geography got a loan, this geography, that gets into a little tougher area to kind of explain as to why that would be the case, right? So what we have done is we have said is in those cases, we will rely on the scorecard base, because that's a proven and tried and tested method. We'll not use AI, but we certainly can use AI to figure out, and it could be an agentic AI to figure out, like for example, if there's a number porting that happens, mobile number porting as an example. Typically, a person who ports or goes through the effort of porting a number is very passionate about that number, right? Unlike someone who just drops that number and picks up another number with another telco, right? So those are people that you'd want to kind of lend to. But getting this insight at the right time is also important, because you're standing at Proma and waiting for your mobile phone and these decisions have to be near instant, right? So the ability to do these kind of things, we are seeing a lot of AI consumption in our organization, and I'm sure this is the case for other organizations as well. But anywhere beyond that, which you have a tough time explaining, right? We rely on the scorecards for now. We are doing champion challenger kind of thing where we are taking insights from the AI, figuring out how the AI model would behave, but we still rely on the traditional approach, and then we see how much of a delta is being created and keep on doing that. But it is still a long way away before we can state that we've used AI in the actual credit decisioning process.
And I believe that we'll have to sort of have some sort of reinforcement learning, so that you pass in feedback to these systems so they continue to learn over time and make better decisions. And I think even the scorecard method is a very interesting one, because you can actually have scorecards even for the AI's outputs, and you can keep grading them, and that serves as a feedback to that machine. So very interesting. Mr. Warrior, what's your thought on this topic? How do we become more regulatory ready as we do this AI evolution very quickly?
So even in traditional tech, there is this concept of observability, right?
Yeah.
So observability and explainability are also tech which has to be used, and it is probably a lot easier to track how a AI went about taking a decision than how a human took a decision, right? So I think the question is not about can I figure out how AI did it, because many of these problems that we are trying to solve are also non-deterministic in a way, right? So it's not easy to explain, but the outcome is easy to explain, right?
Yeah.
So the ownership question that you asked earlier is very critical. So does the person who is a credit officer take the ownership for it, right? So how much of testing you have done, what kind of use cases you ran with it to figure out is the only way to prove that there was nothing intentionally done wrong. So the whole purpose of an audit anybody does is to say whether was something willfully did you do something, right? Because humans also make mistakes.
Yeah.
So I think that explainability and observability designing also becomes very critical, as much as doing the AI model.
Yeah.
And that's it's a question very easy to ask,
Very
but
hard
nobody
to
has the
build.
answer. The only way to look at it is if you strengthen your own internal auditing function, quality function, you will find out any such anomalies, either because you gave a wrong pattern, you did a wrong training to the model, will come out earlier. So I think it will only improve as you do better quality audits.
And should this audit be done by AI or humans?
No, audit should be done by humans, obviously.
And that's
Again, the audit, see any function, that's where I'm saying, I don't know how should we see this? In any function that you use, today there is technology. AI is one of the technologies. So when you say the human should do it, human today is doing things using technology only, So
Yeah.
that question is redundant. Human cannot do it all by himself or herself. AI can't do anything by himself, by itself it cannot do. So it's a combination, it's a given. I think that is a question that should never be asked. How well you use technology and how well the human is accountable for it is the only question that we need to ask, in my opinion.
Yeah, thank you so much for that opinion. Mr. Nischal, looking ahead, what capabilities do you think will define successful human and AI collaboration as credit systems become more autonomous? How do we build this balance of human and AI in a very effective way?
Right. So our approach has always been to empower our customers, right? I firmly believe there is no end solution which has only AI or which has only human. It's going to be agentic, and agents are just, as I said, I tell them as superhuman. I call agents as superhuman. So the way I see this is businesses are putting this in place, but as he rightly said, there has to be a value to it. Like even I am an ex-banker, so once a banker, always a banker. you don't find a problem to solve, right? Or sorry, you don't have a solution, then you find a problem, but you get a problem and then you solve it. So how we are doing here is, my approach here is to provide the toolkit to the customers. We have a product called as Agentic, which is a technology product which we give to the customers, empower them, let them design the process, combining agents and human in their context. It's very clear it has to be in their context. Now on the auditability or on how it will work from an operational part, as you rightly said, observability was always there. So ML ops is a very key critical technology component. You cannot assume your model or your agents are never wrong. So you need to monitor them, especially whether they are hallucinating, whether they are talking crap, whether they are getting biased. So all this monitoring has to be there, not just the performance, but also the integrity of the model, and of course continuously improvise that. So I think ultimately everything will boil down on which model you use, but how do you set the context and how do you monitor it, just like any senior role in an organization. I see it that way.
Yeah, thank you so much. I'd like to open it for questions from the audience now. Can someone pass the mic? Are there any questions for the panelists?
Yeah, hi everyone. I'm Asif from Craft AI. So as Srijan mentioned, AI is good at the basic data like form filling and KYC reminder. So in terms of collection, so especially in pre-DPD or DPD-X, so do you see AI's replacement for agent or any support system? And second is, what is the biggest challenge lender face while adopting AI?
Sure.
See, on collection side, voice AI today is playing a big role anyways, right? So not all customers who sort of default or bounce have an intention to default or bounce. So from a reminder perspective, from a right time to communicate perspective, regional language perspective, as Sudheer sir said, voice agents are playing a big role, right? That I am able to, the agent is able to remind the customer at the specific time in a language that they are supposed to understand. And they can have a conversation. They can have a deeper conversation also today that, okay, when will you pay? Are there any financial issues? How can we restructure the loan and all of that? So agents are playing a big role that way in collections. People are also stitching journeys together. So for example, your collection management system can now speak to your, outbound calling system with an agent and can trigger reminders or voice bot or human-led collections in a way. I hope this answers the first question. What was your second question?
What is the biggest challenge to adopt?
I think challenge is governance here. I mean, that is the biggest challenge because, so if you look at, I'm not sure if you guys followed what has happened in the world of tech in the last 3 weeks. 2 major releases have come in. One is Claude Opus 4.6 and Claude Cowork, and second is this Clawbot or Moldbot as what they're calling. They are insane. I mean, the amount of agentic capabilities these two tools have are far beyond just form filling, I would say. So for example, they would not just, let's say you give them a task to do something, by hook or crook they'll get it done. There was an agent who was tasked to write code and commit to a GitHub repository, and the API key to commit to GitHub was not given to the agent. The agent searched the entire laptop, found a key, tried via a few combinations and committed it, right? So this is what fully agentic means. Now imagine this in a governance setup. You don't want the agent to do these kind of things, right? So for example, if someone has a control over laptop, they can do pretty much everything a human can do. So I think the biggest challenge is how do you convince the CISO, how do you convince the governance team to basically say that it is okay? And to Sudheer's point, how do you really build observability? The previous version of observability was all about uptimes and API calls and latencies. The new version of observability is about explainability, about model drift, about what governance or what controls. Just like we have RBAC for humans, role-based access control for humans, that credit L1 can do only this, credit L5 can only do this, ops L1 can do this. You will have role-based access control for agents also. So there are, smaller agents that can do basic things, and then there are super agents that are always having human in the loop and they can do more advanced stuff. So I think, people who solve for this, and this is a very boring piece of software, by the way, and boring software makes a lot of money. That is what we have seen in the US also. So people who solve really for agentic observability will, really push adoption, in my opinion.
Yeah, well, thank you so much for that answer. I believe that compliance is going to become very important as we see. Yeah, thank you so much. It has been a lovely discussion. Thank you so much for your thoughts. We were able to hear real example use cases on the ground. There's definitely, AI is here to stay, but what I take from this conversation today here is that we were to put governance in place before we start, adopting AI very significantly. Thank you so much for your time today.
Thank you to all our panelists for a powerful and insightful session. I now invite Shobhita Agarwal, our moderator, to kindly felicitate the panelists with the token of appreciation. In no particular order, we have Nischal Tanna, Group CEO at Transform Hub. Ladies and gentlemen, can we please felicitate them with a huge round of applause? Sanjay Shamnani, Chief Liabilities Officer at Kish. Mathew Panat, Chief Technology Officer at HTB Financial Services. Sudheer Warrier, Executive Director at Sundaram Finance Limited. Srijan Nagar, Co-Founder at Finbox. I now invite Mr. Shashank Shekhar to kindly felicitate our moderator, Shobhita Agarwal. I would request you all to please come ahead for a group photograph.